Hello everyone, welcome to this channel. My name is Ruben and today we are going to talk about the big ideas from ARK Invest from 2021. This series will consist of 15 episodes and this one will be about part 5, Bitcoin's fundamentals. The price of Bitcoin has hit an all-time high, supported by robust network fundamentals. As Bitcoin's price hit an all-time high, ARK's research indicated that its network fundamentals remained healthy. And based on research volumes compared to 2017, Bitcoin's price increase seems to be driven less by hype. With Bitcoin appearing to gain more trust, some companies are considering it as cash on their balance sheets. As support for its network increased, Bitcoin's price hits an all-time high in the late 2020. Well, here's an overview of important developments in 2020. On the x-axis you have time and on the y-axis you have the price of Bitcoin. For instance, last year MicroStrategy announced a 500 million Bitcoin investment. Square started to allocate 1% of its assets into Bitcoin, and PayPal launched its crypto buying and selling service. Bitcoin's market participants never have been more long-term focused. As of November 2020, roughly 60% of Bitcoin's supply had not moved in more than 1 year, a testament to the market's long-term focus and a holder with strong conviction. You can also put that in a graph. On the x-axis we have time and on the y-axis we have the share of Bitcoins outstanding. They divide this into 7 time frames. Purple is 1 day to 3 months. Green represents 3 to 6 months. Watermelon color represents 6 to 12 months. Yellow 1 year to 2 years, the teal color 2 to 3 years, the gray 3 to 5 years, and black represents more than 5 years. And you can also see that the percentage of Bitcoin supply held for more than 1 year is increasing, and the percentage of Bitcoin supply held for less than 1 year is decreasing. You can also call this a hodl wave, and hodl is a slang in the cryptocurrency community for holding the cryptocurrency rather than selling it. In the following clip, Yassine Elmandjra will talk more about valuation tools and Bitcoin holding behavior.
With the birth of a new asset class comes the birth of new valuation tools and metrics to deconstruct not necessarily a balance sheet to create a discounted cash flow model, but in this case, if you agree that demand is the only driver for value, then to deconstruct buyer and seller behavior and to really break down raw supply and demand of the network. And thanks to the transparency of that network, you are able to, as an investor, see different patterns of holding behavior emerge, which might help you dictate whether something is overvalued or undervalued at any given time. There is something called the blockchain, which people like to use as this buzzword, but that actually has a lot of value within the Bitcoin network that allows for you to have, think of it as like this 24/7 transparent global balance sheet that, in addition to being able to verify transactions and supply, also allows for you to determine what sellers and buyers are thinking at any given moment, given their decision to transact Bitcoin, transactions being a proxy for selling and holding Bitcoin being a proxy for, increased demand. And so, this is actually some of the research that I'm working on that I'm really excited about that we're going to publish very soon. But it talks about how really to date, most valuation analysis in crypto has been force-fitting traditional asset valuation frameworks. And that's where something like, a high growth tech stock is going to be volatile, but at least, I know that it has a balance sheet and a team and some sort of fundamental intrinsic value. That's where it's hard to make the jump of, okay, let's not even think about that when it comes to Bitcoin. And so, the analogy that you can really give is like Bitcoin has this transparent balance sheet. It's a 24/7 ledger in which I am able to determine the investor cost basis of Bitcoin. I'm able to determine how long people are holding this asset, and I'm able to determine what cohort of asset holders affected certain price movements, right? For example, the COVID meltdown, where we saw the largest drawdown in price history, or the second largest in price history in March, Bitcoin drew down 50% in a single year. That is a corroboration to your exact concern. You don't know if something's going to happen where people are going to pull away their money. And in the case that they do, then you see a 50% sell-off, which is what we saw and which is what we'll definitely see again. Now, deconstructing the driver of that sell-off, you realize that most of the sell-off was dictated by very short-term holders, people who had actually last moved their Bitcoin less than 7 days ago. So what that tells me as an investor is, okay, there's no fundamental reason beyond speculation of why people are moving outside the asset. This is potentially a great buying opportunity, because conversely, you have holders who have been holding this for so long who hadn't moved their Bitcoin at all during the coronavirus meltdown, which is indicative of strong holding behavior, which is, okay, the fundamentals there have remained the same. And so you look at, for instance, today, over 60% of Bitcoin holders have not moved their Bitcoin in over a year. You can account for, yes, lost coins, but what that really signifies is people are just becoming much stronger in their conviction and they don't want to touch their Bitcoin. So imagine analogously, you could have, a balance sheet that shows exactly which holders of Tesla were selling at which points, for which reasons, and at what cost basis they got in. That's like a very strong signal if Tesla was exclusively reliant on people's willingness to hold the asset itself.
Sure.
Bitcoin's market and investor set appear to be maturing. Bitcoin's realized capitalization, a measure of holders' cost basis, has hit an all-time high. A growing cost basis suggests that early investors are taking profit, while newer investors are establishing positions and creating higher price support levels. You can also see this in this graph. Bitcoin's aggregate cost basis hit new records in 2020. On the x-axis we have time, and on the y-axis we have US billions of dollars. And the purple color represents realized capitalization, that's the cost basis, and the green line represents market capitalization, and both are going up. Compared to 2017, the hype around Bitcoin appears contained. Putting this in a graph, on the x-axis we have time, on the left side we have the y-axis, which represents relative search volume as percentage from Google. On the right side we also have a y-axis, which represents the Bitcoin price in US dollars. The purple color represents Bitcoin price as a search volume. The green color represents the Bitcoin price. In 2018 we had a really high peak, but right now Bitcoin's search interest is low relative to the increase in its price. As its price neared all-time highs, Bitcoin's Google search interest was at 15% of its all-time high. In the following clip, Yassine Elmandjra will talk about the trade-off between security, decentralization, and speed.
There are clear trade-offs between security, decentralization, and speed. You can't maximize all three, and anyone who's telling you that they can maximize all three is misleading you in very serious ways. Bitcoin's base layer has explicitly chosen security and decentralization over speed. And the initial conception of Bitcoin being that P2P electronic cash system, I agree, has not met 10 years later that initial conception. But just like in an emerging technology, the narratives and the evolution of those narratives change. With that being said, the way that I look at Bitcoin's base layer, and then we'll get into scaling, is as this very robust economic settlement layer that can handle max throughput that any existing centralized service, max economic throughput, not so much max quantity of transactions throughput, that any traditional centralized service can simply not compete with. You can send billions of dollars worth of Bitcoin in a matter of minutes, and depending on your risk appetite, likely hours, but let's just say if I was a more risk-seeking, minutes, around the world in a way that no government, no centralized entity can stop, and in a way that is provably that has been provably transferred. Mm-hmm. And so when you look at Bitcoin's base layer as that high value settlement layer, no one can compete. Now, to your point, that's not going to help you buy a cup of coffee. So the question then becomes, what sort of trade-offs do we need to make to have Bitcoin at a higher level compete as a medium of exchange. And I will agree with you, it's certainly not at the base layer. But just like the internet scaled via a layered architecture, and now you had specific protocols that were meant to do specific things, I envision a world where Bitcoin as a network is going to be very similar in its ability to scale. The base layer should not be touched. It does a few things that to the human eye is very, very boring, but very, very important. And if I'm going to transact a cup of coffee, perhaps I don't need those same security guarantees that I might need if I'm settling amongst banks. And so perhaps I'm willing to sacrifice a small security guarantee by building on top of the Bitcoin network through something, let's say like the Lightning Network, that allows for you to create bi-directional payment channels that doesn't have quite the security guarantees of Bitcoin, but you're putting much less collateral at risk that a $5 cup of coffee, if it weren't to go through, if it were to get hacked, is something you'd be willing to kind of afford to lose if it comes at 99% of the time being very convenient. And so if we're talking from a scalability and infrastructure and tech play, I will say that Bitcoin can and will eventually support itself as a medium of exchange / unit of account.
Okay.
You have to, and I'll finish by just saying you have to realize that this is not some sort of, and not you, I'm saying the metaphorical you has to realize that this is not some sort of, 5-year get rich quick scheme or 10-year. Like this is a multi-decadal, if not multiple century paradigm shift in how we define economic settlement, money, the transfer and storage of value. And I would consider this just to be at the beginning of what will take decades to develop. But I ultimately think that we will have this non-sovereign global medium of exchange, and whether you want to define that as a currency or commodity today is independent of that belief.
Bitcoin's increasing acceptance has set the stage for Ethereum and a new wave of financial experimentation. ARK believes that decentralized finance, also known as DeFi, has been a positive catalyst for the increased adoption of Ethereum's network. By leveraging Ether as trust-minimized collateral, market participants can disintermediate traditional financial companies and access financial services such as credit and lending, market making, trading, custody, investing, and access to synthetic US dollar exposure. And this financial experimentation on the Ethereum network is displayed in a graph. On the x-axis we have time, and on the y-axis we have US billions of dollars. The purple color represents stable coin market capitalization on Ethereum, and the green line that is going up, that is the total Ether value locked in DeFi. And last but not least, sizing the opportunity, Bitcoin could play a pivotal role as corporate cash. Square and MicroStrategy, both with balance sheet investments in Bitcoin, are showing the way for public companies to deploy Bitcoin as a legitimate alternative to cash. You can also put this in a graph. On the x-axis we have the Bitcoin's potential percent of cash on corporate balance sheets, and on the y-axis we have the potential price increase per Bitcoin. And according to the research, if all S&P 500 companies were to allocate 1% of their cash holdings to Bitcoin, its price could increase by additional $40,000. And if it's 10%, it's almost $400,000. Thank you everyone for watching this video. I really hope you enjoyed it, and see you on the next part.